has a bear wearing 3D glasses being shot out of a portal. So in this fresh episode, we take a look at the cryptocurrency staking coin known as Ankr. Are you wondering what we're going to do with Ankr? What we are doing is evaluating price prediction. And spoilers? I'm sure you want the spoiler. The prices are all very bullish from current Ankr price levels. I know you want the details, but let me tell you the methods first. Given the channel is called Unusual Due Diligence, we're going to review the price predictions in a very unusual kind of way. Here's how it works, and why I took this approach. Let me tell you the why first. So I know that in order to compete with all of the other full-time YouTube financial experts on YouTube that are just one click away, and at the same time offer you a compelling reason to watch this show, that I was going to have to offer you a lens into the market, the data, and the community that you just aren't going to find anywhere else. And I'm certain no one, and I mean no one, has a bear wearing 3D glasses being shot out of a portal. So here's how I pulled off this completely different take, and in the process revealed several new insights. First, I went out to Twitter and Reddit to take a random sampling of Ankr price predictions over the last 3 to 6 months. I put to work what I called deliberate random walk in order to crawl the data and collect it, but that's not all I did. Second, as I jotted down the price, I did a little bit of extra processing. For example, and if you're wondering, yes, I even included the out there prices as well as the more competent ones. If someone provided a range, I took the average of the range, I completely ignored the dates, and I also didn't pay much mind to the extraneous details. The goal of this exercise is the following theory. If I take a random sampling across Twitter and Reddit, what price insights might I glean from the market? Third, I'm going to review with you exactly the data in the detail. I have it all nicely organized, packaged up, and delivered here in this video. Now, I also made a cutoff of around 50 total prices in my research exercise. I did not want this to be too involved as I needed a bit more time to build the animated bear cannon in the background. There are sacrifices that at times must be made. The other key bit here is I wanted the data collection or sampling of this information to be random. Here's why. The average person who pokes around these social sites, at best, is going to stumble upon, say, 50 total random price predictions. I wanted to know what price predictions is the average investor going to leave these sites with. Let me say that again, but with a different example. Let's say you're a new cryptocurrency investor and notice the attractive price of Ankr at its current price levels. You're not real sure whether it makes sense to invest in Ankr or buy another compelling coin, say AMP. These coins specifically, because the average investor can find them on Coinbase, they start with the letter A and they are both under $1. For a small investor, this is a far better play than, say, most penny stocks. That investor needs a little bit of guidance to understand what cryptocurrency to go with, and so they will take to their preferred social network to get an approximate understanding of the price action of the asset. How high is their investment going to go? And I wanted to know is what price action predictions will this new investor find? Well, no one can predict the future, but what we can do is look at the price predictions of two large communities and come to some conclusions about what these community traders believe the price action is going to do for Ankr. Ready? Let's dive into the data. As shown here, I have precisely 47 prices total recorded from Ankr across both Reddit and Twitter. Of those, I have 14 prices sampled from Twitter and 33 sampled from Reddit. Now, even based on this small data set, there are some rather curious insights on the data. I'll highlight those now. First, let's look at how the price skews on these networks. The average price skews higher on Reddit than Twitter. Frankly, that surprised me a bit. It'd be interesting if only a larger data set, if that still holds true. But as shown here, Reddit is nearly 5 times higher in terms of average price over what I found on Twitter. A strange correlation is found in the data set. What's that? There does appear to be a strange correlation between the length of the URL of a post or tweet predicting the price of Ankr and a higher price. That is to say, if the URL is longer, it would appear you are more likely to find a higher price contained in that URL than, say, a shorter URL. So by that logic, I'd assume a very short URL would mean you'd have a very low price estimate for the future. There are some cases where this does not hold, but by and large, this does appear to be a sign of possible correlation that might appear in a larger data set. Even more fun is if you plot the data and ask the question, what if I look at the length of the URL and take the maximum price reported for each? Want to know the crazy thing? If you take this minimalist approach, you discover the overall sentiment is still extremely bullish, as shown here. If you enjoy this video, please tap or click the thumbs up as it helps the channel by convincing the YouTube algorithm that why yes, we do need more people to see this video, if for no other reason than the bear cannon. In the next example, the average social length shows the URLs seem to be about the same on the surface, but as the data indicates, the average price is not. Another remarkable lens is that the price sentiment suggests that these traders feel the price isn't just undervalued, but that a pretty severe series of gap ups could be predicted by way of the predicted prices of the traders themselves. The traders are saying in the future, price goes up. You can see a remarkable price band here in this data at 18 cents to $1. Mind you, we're talking about an incredible 10 times return from current investment levels. What I love about this graph, however, is that it shows the very interesting correlation visually between both the length of the URL and the price. The slopes are very similar. So let's talk conclusions. The short conclusion is that the community is long-term bullish on Ankr despite short-term price fluctuations, and this is held true for nearly the entire year, including earlier this year where the price had dipped substantially. If you enjoyed this video, click thumbs up. That concludes this video. Poseidon out.